If you've ever wondered whether you can use your 401k to buy a home, you're in the right place. One of the most common questions I get from first-time homebuyers is, can I use the money in my 401k to buy a home? It's because so many of us have our biggest chunk of savings sitting right in our retirement account. And yes, you can absolutely use your 401k to buy a home with an FHA loan or any other loan. And in today's video, I'm going to break this down in a very simple way. You'll learn exactly how FHA loans work, how to use your 401k for the down payment or closing cost, and the two methods to access your money safely, and what lenders like me look for when they verify those funds. We'll also go over 3 examples of real buyers who've done this successfully, plus one real life scenario straight from my own experience helping a family become homeowners with this exact strategy. So make sure you stick with me till the end and I'll get you your free FHA home buying guide. So whether you're a first-time home buyer or you're starting over after renting for a few years, this video will show how to use your 401k to build long-term wealth through real estate. Hi, I'm Alex Ramirez and I help first-time home buyers and step-up home buyers navigate the mortgage process with confidence. And don't forget to like, subscribe, and tap that bell so you never miss any of my weekly updates in the future. Okay, so now let's dive in. Let's go over understanding FHA loans first. An FHA loan is a mortgage program backed by the Federal Housing Administration, and it's one of the most flexible loan programs available. And it's designed to help first-time homebuyers and those with moderate incomes or credit challenges become homeowners without needing any massive down payment. You can buy a home with as little as 3.5% down with the credit score as low as 580. And what makes FHA unique is that it allows you to use funds from various sources, including gift money from family, employer assistance programs, and even your 401k. FHA also offers more forgiving debt to income ratios, which means you don't have to be debt free to qualify. This combination of low down payment, flexible guidelines, and accessible fund sources makes it an excellent fit for buyers who have savings locked away in a retirement account. For example, let's say you're buying a home for $450,000. Your down payment with FHA would be roughly $15,750. That's 3.5%. Let's say your 401k has $80,000 saved. Using a portion of it could cover your down payment and closing costs, and even your inspection and appraisal fees. FHA doesn't penalize you using that money. In fact, it recognizes your 401k is your own asset. And let's go over why buyers use their 401k funds. Most buyers turn to their 401k because it's the largest pool of money they have access to. Saving cash on top of paying rent, bills, and other obligations can take years. And in the meantime, home prices and interest rates can rise. Using your 401k allows you to take action now instead of waiting to save up someday to buy a house. It turns your retirement savings into a tool of opportunity to build real estate portfolio. When you use a portion of your 401k for a home purchase, you're not necessarily taking away from your future. You're just repositioning it. Real estate historically appreciates around 3 to 5% per year. And you're also paying down your mortgage every single month, building equity that compounds. And for many families, that combination outperforms their 401k growth rate during the same period. Let's go over an example. Sarah, a nurse with 10 years in her career, had $65,000 in her 401k. She borrowed $20,000 to buy her first condo using an FHA loan. Fast forward 5 years, her condo appreciated $110,000 in value. She paid her 401k loan back and gained more than she would have by leaving it untouched. That's a smart, wealth building move. Now let's go over the 2 ways to access your 401k for a home purchase. There are 2 main ways to tap into your 401k, a loan or a withdrawal. Each option has its pros and cons, and it's crucial to know the difference between the 2 before you make a move and make sure you talk to a tax professional. And option 1, the 401k loan. This is the preferred method for most FHA buyers. You can borrow up to 50% of the vested balance or a maximum of $50,000, whichever is lower. You don't pay any early withdrawal penalty or income tax because you're borrowing it from yourself. The best part is that every payment you make goes right back into your retirement account with interest. And when you pay it back, it's all paid pre-tax. Here's an example. Jason, working in logistics, had $120,000 in his 401k. He borrowed $30,000 and used it for his FHA down payment and closing costs. His payroll automatically deducted $500 a month to repay himself. And that money went back into his retirement account with interest. He essentially financed his home with his own money. And option 2, the 401k withdrawal. This option allows you to take a hardship or early withdrawal, but it comes with a 10% penalty if you're under 59.5. So make sure you talk to a tax professional before you do this option. Some employers allow exceptions for first-time home purchases, but remember, every plan is different, so you'll need to check with your HR department and the 401k administrator. Here's an example. Rebecca, an engineer, withdrew $15,000 from her 401k. After taxes taxes and penalties, she netted about $12,000, just enough for FHA down payment. It wasn't ideal, but it allowed her to buy before prices went up the following year. She later refinanced, regained her savings, and still came out ahead. And here's a pro tip. If you choose a 401k loan option, although you have to pay it back through your paycheck, that payment does not count against your DTI when qualifying. And if you're ready to take action now, don't hesitate to reach out to me via text or phone call. My information will be right here on the screen. That's my phone number. Or you can go to my description and schedule a discovery call through my Calendly, and I'll be more than happy to put a plan together for you. And let's go over the paper trail when it comes to withdrawing money from your 401k. Once you access your funds, the lender needs to verify where the money came from. And this is called sourcing and seasoning. It's how lenders ensure that the funds used from your down payment are legitimate and accessible. And FHA guidelines are clear. As long as you can document the source of your funds, your 401k money is acceptable. You'll need to provide 3 pieces of documentation: your 401k account statement, your loan or withdrawal confirmation, and a bank statement showing the deposit into your account. And remember, timing really matters. Try to initiate this process a week or 2 prior to submitting an offer on a home, so you can avoid any potential delays during the home purchase. And here's a pro tip: avoid moving money between multiple accounts. The cleaner your paper trail, the faster your loan will close and you'll have less issues. As a lender, I've seen delays simply because borrowers couldn't provide the proper documentation when they were moving money. When handled correctly, this process moves smoothly and completely acceptable under FHA guidelines. And let's go over some real world scenarios using a 401k the right way. And let me share a real life scenario from one of my clients who purchased a home a few years ago. Carlos and Jessica, a young couple in Ventura County. They had been renting for 7 years, paying nearly $3,000 a month in rent. Carlos had a 401k worth about $90,000 through his employer. Their dream was to buy a home for $550,000. It was a starter home, but they were short on funds for the down payment. So we reviewed the 401k plan and confirmed he could borrow $45,000. They used about $30,000 for the 3.5% down payment and closing costs. They provided the loan documentation and transfer proof, and we cleared the file quickly. Within 30 days, they closed on their first home with no penalties, no tax issues, and the 401k payments simply deducted from his paycheck. And today, that home is now worth nearly $750,000, and they've gained over $200,000 in equity in less than 5 years. That's the power of using your 401k strategically, turning a dormant savings account into generational wealth. And here's what lenders look for. When an underwriter reviews your file, they care about 3 main things: documentation, accessibility, and the impact on your debt to income ratio. FHA guidelines allow 401k funds because they're secured by your own assets. That means you're borrowing from yourself, not anyone else, not taking any additional debt from a third party. If you're repaying a 401k loan through payroll deductions, it doesn't count towards your debt to income ratio. The key is transparency. Lenders want to see that the funds are yours, that they're accessible, and that the documentation supports the movement of funds very clearly. And here's my advice: let your lender know early that you plan on using your 401k. A good loan officer will help you structure everything correctly so that it's smooth during underwriting. And when we know in advance, we can give you the exact paperwork you'll need and make sure your funds are timed perfectly with your escrow process. If this information has helped you, don't hesitate to reach out to me. You can call or text me. My information is going to be right here on the screen, or you can go to my Calendly and schedule a discovery call with me, and we'll put a plan together and we'll structure everything to get you in your home using your 401k. So let's go over building wealth strategically. Using your 401k doesn't mean you're giving up your retirement. It just means you're diversifying it. Real estate is one of the most powerful vehicles for long-term wealth creation. When you own a home, every payment you make builds equity. And unlike rent, that money stays with you. And there are many tax benefits when owning a home. Let's put numbers to it. Suppose you buy a $450,000 home with 3.5% down, and over 5 years, your property appreciates 4% annually, reaching about $547,000 in value. And during that time, you've also paid down your mortgage by roughly $35,000. That's $132,000 net gain. And you've repaid your 401k loan. That's wealth building in real time. And remember, your home is not just a place to live. It's an asset that protects you from inflation and creates stability for your family. So whether you're using a portion of your 401k or all of it, you're moving from saving for someday to building for today and tomorrow. If you've been hesitant about touching your 401k because you're worried it'll hurt your retirement, consider this: that account is part of your financial story, not the whole story. Using it wisely could help you own a home, grow equity, and protect your family's financial future. And remember, be smart, be prepared, and let's get you home.